Hey guys, welcome to another week of Brett's Property Rants. So, not a lot happening this week actually. I mean, there's a few big things, but I actually struggled to get a volume together, which is quite interesting. But actually there's some good news, which is that stamp duty looks like it's going to be extended for 3 months. So we'll talk about that. We're going to talk about detached houses winning, because basically what's happened is they've performed the best. So we'll have a look at that and what other ones have performed. And then overseas markets and how they've fared through this as well. Hey guys, so if you've got any questions, make sure you type them into the box, whether you're on Facebook or YouTube or Vimeo, wherever we're going out to. I think it's Twitter as well. But yeah, just any questions, I'm happy to answer them as we go through. But yeah, so lockdown plan and how that's going to affect the property market. Little hint, it's good news. Same with the vaccines. I think that's good news as well. House price crash 21 to 1. We'll see. Let's talk more about that. And then next week we'll be doing the live budget special. So actually I'll be live while he's announcing it. So I'll work out what time that is. It's going to be about this time. It all depends when he actually gets there and starts talking. But yeah, we'll set that up. But yeah, guys, so let's get into it. So before we do, any questions you've got, type them in there. Make sure you subscribe to the channel so you get my weekly updates as well as all the other videos that I'm doing. And if you've got any questions, you can get me at easytrack.co.uk or gladfish.com. Otherwise, Brett's Property Rants, I'm always answering questions on there throughout the week. Good. So let's move into it. So stamp duty. It's interesting. When I started this planning, it was like, what's he going to do? He's sort of indicated he won't change. And I thought, geez, maybe my prediction had been wrong. It looks like actually I'm going to be right on the nose. I didn't want a 6 months because that would send us into winter. 3 months is perfect, and it looks like from the leak, and of course this is one of the interesting things with the government is, nothing is secret. And there's so many leaks in the government, it's ridiculous. But what we're talking about is that effectively if you've got a mortgage offer by 31st of March, then you get a further 3 months to actually come through, which is actually, I think, a good way of doing it and dealing with it. Because what it does, it stops that cliff edge, it stops people trying to race things through, and really it eases the market back in. And I've said this along, even from late last year, saying that the way you ease off is you target specifics, not generals. So last year was about general incentive stimulus. Now it's more about specific areas. So I think if you've got a mortgage offer by March 31st, you should be allowed that time to complete, So it's good news. And actually, I think it's the right decision, even though he hasn't even made this decision yet, by the way. So he hasn't actually come out and said this. It was a leaked document to a media, and we'll see. We haven't got the full details. It may change. It may well be that it changes. But that's what he's looking at, right now. So, yeah, which is going to be quite interesting. Sorry, I just realised I missed my face on that whole thing. But anyway, that's fine. Great. So James has got a message here. So a lot of investors are saying stamp duty holiday artificially inflating prices. Once they go away, they may come down again. What are your thoughts? So actually, in fact, I don't think that's going to happen. I think that's rubbish. It hasn't artificially inflated prices. What it's done, it's created and kept up the demand through COVID. Okay. And actually, if anything, when you have a look at this next slide that I've got, it doesn't show that the market did anything spectacular. In Australia, and I'll show you from Australia, there's a lot of places where prices have gone up considerably. We're talking 20, 25% last year, which is huge amounts in some area. We haven't seen that in the UK. So this whole thing about inflated prices, property boom, that's the news media. It's absolute rubbish in reality. Okay, and I'll show you the next slide. Sorry about that. I've got an issue, so it's all right, but I've worked out how to sort it out, but I must have missed that one. No, look, so this is the type of property from December 19 to December 20. So 1 year last year. Okay, if you have a look at that, the blue line up the top is detached houses. So you can see they've edged up, from 350 to 390 or whatever it is. Okay, so not a huge amount. We're talking 10%. If you look at the semi-detached terrace houses and flats and masonettes, really they haven't done much at all. We're talking, that's where the 3%, 4%, that's not inflated prices. That is actually a symbol of the market, and actually a market that's functioned really well through COVID. So I think actually, that whole thing about, inflated prices, mini property boom, it just isn't mirrored over there. And I think, sorry guys, I have a feeling they've gone. I got rid of these, the buzz, but I'll have to just get rid of it every single slide. Okay, so look, how COVID is impacting property prices in UK and overseas property market. Obviously, we just talked about the UK, but if you've got places like Germany, Hong Kong, China, Singapore, these places actually have had, if anything, affordability come back to the market, partially because, surprisingly, wages have held steady and in fact increased, but the property prices haven't actually dropped. So that's, what we're seeing here in the UK is actually mirrored all around the place. Yeah. So, don't think for a minute that the UK is a special case, that, prices have to drop because they rose last year. And, they only rose at 4%, which is what we do most years anyway. The only distinction was last year, they probably should have dropped, as everything should have dropped, in a normal response to an economic event like that. But instead, the government stimulated massively. And you know what? That's been the best decision, I think, to kicking the can down the road, but it was the best decision because it gets us through that drop and allows us to grow out of it, okay? Rather than just punishing everybody, which is normally punishing the poor, and the people who are least likely to be able to survive a downturn. It's been, for me, a wonderful response, and it continues to be. I've said it many times, I don't think they've stepped a foot out of way, even with the vaccines, as we'll see soon. They ordered them early, they got in there before everyone else, and now look what it's showing, 1 in 3 of the population, is there. So look, this is some Aussie data. What Aussies did is they introduced a home builder bonus, okay, which was 25 grand if you sign contracts between the 4th of June and 31st, and 15 up until March 21. So that has actually meant massive, purchasing across the country. I mean, you can see Northern Territory, ACT and Tasmania haven't really, but they've got much smaller populations. Really Victoria, New South Wales, Queensland, that's where most of the population is. They've, it's hard to find stock in terms of land to build properties on, but also any stock whatsoever. So it's been quite an interesting time with that because there's been huge numbers, and where governments have stimulated, and what they have done is kept the property market really going well. But this is the other thing I think that people miss, is that they're saying, well, hold on, they've stimulated the property market. Actually, they've stimulated not only the property market, but look at shares. Look what shares have done, or stocks have done, I mean, they've gone up massively, So it's not just a property market or a shares market, or it's a stimulus-wide market, a market-wide stimulus, sorry. And I think that's important, So yeah, guys, any questions you've got, just pump them in the thing. But hopefully, James, that answers your questions in terms of artificially inflated prices. Look, if you take it literally, artificially inflated prices, yes, they were artificially inflated because the government stimulated the economy. But then isn't that their job? Isn't that what they're supposed to be doing? And I think that's the key here is, we can say, oh, but it's artificially. We shouldn't be using this fiat currency. We shouldn't be taking on all this debt. The reality is, the rules of the game has changed, and this is the new rules, And yes, printing new money is one of the things that happen in this new economy, in this new economic model. It may not be the best answer, but it's the answer we've got, and it's actually, I think, probably the best answer. Yeah. And I think we'll look back in a few years and go, you know what, that was actually a great move. I think the debt, being long-term debt, very low interest rate, is affordable, and I mean, it'll be interesting to see. I saw an article today about Amazon. Rishi Sunak is looking at how he can reap some of this excessive profits tax effectively, which is because the lockdown happened, online retailers have benefited massively. So how can he extra tax that? Which is a good way of looking at it, because they've artificially been given that, benefit over the high streets. So, but yeah. So Ritz wrote, wait and see how things go or invest now. I think the problem you've got is, look, there's uncertainty. That's for a fact. I think as long as you're buying in areas that have good fundamentals, you can still get deals now. And I think that's one of the key. If you can get deals now and you're willing to go ahead and you're not overextending yourself and you're prepared to look at it for a long term, then actually now there's some bloody good bargains around. Developers are still willing to do, and people are still willing to do deals, whereas if the longer we get, if we don't drop off a cliff, those prices I think are going to sustain and probably grow. I'm in two minds. I think there's certain areas where I wouldn't buy, and I wouldn't buy because they're going to be most affected by not only a short-term drop, but also long-term fundamentals and changes. So your major cities are going to benefit. So you can probably buy there and be a lot more certain than if you're going out into the suburbs that don't have the transport links, that don't have the jobs, that don't have the population around the area, don't have the fundamentals, shops, schools, transport links, all that sort of stuff. They're the areas that I'd be staying away from. And we have realistically since 2011, I think we changed our strategy where we moved away from those places. But yeah, cool. So moving on. So lockdown, Boris unveils the plan to end by June 21. Now put this one here because this is stage 2, 12th of April. Yeah, self-contained holiday accommodation open. Yeah, that's actually good news for the property market. One of the challenges in a lot of areas for rentals is all these serviced apartments that were serviced apartments and doing very well in COVID got hit, and they've just been dumped onto the rental market. And that's driven rents down. Now in some areas it's quite significant. You go to central London, it's quite significant. In Canary Wharf, it's been suffering. And that sort of financial triangle in that sort of area has been suffering. A lot of places outside that haven't really been affected by that because they weren't really serviced apartment places. But what it does, at 12th of April, it gets that market back and moving, so it'll take some of that supply away. Not all of it. Some of it I think people will just be, no, I'm going to stay there. But that's good. It's good news because it redistributes the demand to a more equal footing. So I think that's quite good. The other side of it is there's nothing better than having a plan where you can see, right, this is happening, this is happening, this is happening. I can plan towards that. And that's what we want to see from the Prime Minister. And that's what we want to see from politicians, is actually planning this out and activating that plan. One of the other things which I think, so that is good having that. Then we've got, number of COVID vaccine falls by a third as vaccine supply dries up. These are the sort of headlines you get. But the reality is 26.8% have received their first dose. Daily vaccinations 192, although it was at 400,000. But they're saying that they'll have a bumper, weeks in March. It's actually good news, this, and I think moving on from that, not only has that been a really good thing, because that decision was made early. And if you remember, there was, the opposition was saying, why are you wasting all this money on 3 different vaccines? We don't even know if they work. Well, actually, I think that decision has been vindicated now, The other side is this, why Johnson & Johnson vaccine has got a bad rap and why it's not fair. Look, it's not fair because a lot of their ways of looking at it, or a lot of their research data was in South Africa and South America, which had some of the more serious strains. So they're only 66% effective versus 92. But they're not apples for apples, But the point is, we've now got multiple versions of the vaccine, within a year of that happening. That's unheard of, which is great. Amin here says, do you think the glut of probate properties waiting to enter the market might suppress prices? Yeah, I don't think so. And the reason I say that is a couple of fold. if you look at the numbers, actually I don't even know how many it is now that have died. Basically probate property, someone dies that owns property, has to go into probate, and a lot of times that is sold to pay for inheritance tax or whatever it is. Okay, so the first thing is most of those deaths are spread all around the country. Okay, they're not in any particular area. So the likelihood is that a lot of these, they may have had planning, they're going to go to, because it's more skewed towards the elderly. So there's that side. They may have already had planning in place, so it doesn't mean they're necessarily going to sold. The other side is being spread all around. No one market is going to get hit massively. The other side of it is, as much as COVID deaths have caused X amount, the reality is the number of people dying from colds virtually went into remission. So, when you look at the actual number of people to die, it's not that much higher, and it is, but not stupidly enough to worry about probate properties. I think it's a question that I actually already had a couple of weeks ago that we were talking about this. And the numbers just don't stack up to say there's going to be a massive amount of properties, okay? Yeah, and that may change, but I don't think it will, because actually the death rate's coming down, and now that we've got a third of the population vaccinated, things are looking pretty good, so yeah. Yeah, guys, keep the questions coming. That's good. It's great. Okay, so house price crash 2021. So I typed that into Google, and here's the top 3 things. Actually, there was 10 articles and there was 3 videos. It was about 50 videos actually. A lot of people predicting house price crash, share market crash, all this sort of thing. The reality is, and I think I'm actually blown away by this, but normally Mary in Somerset Webb don't really, and I don't see it eye to eye. She's very negative on property, and she says, why we won't see a house price crash in 2021. And the reality is, I think, if anything, the fundamentals have changed. Houses have become not only a place to live, but also workplaces. And I think because of that, there's a lot of reason to believe that actually these prices will be sustained. And that's why nobody's really calling for a crash this year or next year, in fact. There's very few people who are saying house prices are going to drop 30, 40%, 20%, anything like that. And that's not now, that's actually going out. And if anything, if we do get some inflation through all this money being pumped in, the reality is housing and debt against housing is actually a good hedge against inflation. So, that can work quite well. So yeah. Guys, any other questions from anyone? So yeah, I think, it's hard because every week I expect to get some negative news or this massive kick up the arse, and I said that word, sorry. But the reality is, I'm not seeing it, and I'm not seeing it because when I look at the fundamentals of everything, it's still looking pretty good. Now, make no mistake, I'm not saying that it's all rosy and dandy. If your tenant is not paying the rent, you're basically screwed. The government has left you high and dry, and they keep allowing these people to stay in properties without paying, the rent. And, yeah, you might be able to take them to court and get that back and, make arrangements and that. It's a small percentage of people, but if it's affecting you, it's massive, and it is a small percentage. I think we have about four or five morbidly people who are basically not paying and decided not to pay. We've got a number that are on pay plans, but most of them are on pay plans, and most of them will be able to help get government support. So from a tenant's side, there really isn't no reason apart from you're a degenerate piece of crap who shouldn't be paying the rent. So everybody has been doing that, and actually that's been working pretty well. I mean, we've been in lots of mediation in terms of getting involved in between the landlord and the tenant and trying to work things out, getting pay plans and running that, So yeah, Elisa's just sent a question. So now things are looking up. Which areas in the UK do you think are considered best for property investors? Look, it's the same story as I say every week, which is basically, you've got to look for the fundamentals. Shops, schools, transport links, major employers, major investment. And if you look for those things, okay, with investment being the most important, they're the places that are going to grow. You know, your major cities, because that's where the investment dollars is going. That's where the future is. As much as people say COVID, no, people want to live out in the suburbs, you watch when vaccines are done, you know, the market opens back up. People want access to the fundamentals. They will move back into the cities quick smart, you know. So if you can take advantage of that now, you know, that's going to benefit you. The challenge, I think, is if you don't really understand what fundamentals are and how to actually assess them. And the problem is there's salesmanship and there's fundamentals, yeah? And there's a big distinction, but they can be made to look the same. So I think the key is, if you don't know and you're not sure, you know, call one of the team up, speak to one of the team, talk about our due diligence invest, our DDI we call it, and the process we go through there of assessing the investment, the transport links, the employment, the shops, the schools, yeah? And when you understand that, then you become a much more of a numbers investor or a professional investor, yeah? And I think that's important. But look, yeah, I think stick to the fundamentals, whatever they are in that area, in your area. And, you know, stay away from areas that don't have fundamentals, because then long term, they're not necessarily going to grow. People don't want to live there, yeah? And they have enough choice, yeah? So good. Any other questions, guys? Because that's me pretty much done for this week. So a nice, quick and easy one. But look, the other side is next week, one of the things we're doing is the live budget special. So it'll be around 12:30, I reckon. I just haven't got the exact time. But anyway, I'll basically start at 12:30 and then go through whenever. Or if I find out it's a bit earlier, that he'll be actually giving his speech. It might be 12 o'clock. I'll be on, you know, 15, 20 minutes before that. And we'll just run through what it means for property investors. I'm not really worried about all the other garbage. What I worry about is what it means for you as a property investor and how you can take advantage of that, okay? Because look, in any market, whatever's going on, you can find the opportunity, and if you take advantage of it, then you can make money. And this, like every other time, there's opportunity and opportunity to make money, yeah? So guys, that's pretty much it. Remember, you know, you can always email me at webinars@gladfish.com and I can answer questions for you. Otherwise, you can speak to the team, and which I'll put the details up in a sec. But look, you know, have a chat, get the certainty, and you know, and invest with certainty, because now is actually, you know, this huge opportunity, and you still got a lot of, you know, it really is a buyer's market now versus a seller's market. Don't listen to what we're saying about the stamp duty and all that sort of stuff, because that hasn't really created, you know, a seller's market. It just hasn't, you know. But it's certainly kept the base, you know, of the market up, which is good, you know. So yeah, cool guys. All right, have a fantastic week, and we'll see you again next week. See you later, Chi. Thanks, mate. Yeah, but yeah, no, perfect. And yeah, hopefully we'll have a great budget where it won't affect the property investors too much. I don't think it will. My prediction for next week is that we're not going to see a huge amount of change in taxes. I think it'll be more of a stimulus budget again, because what we don't want to do is, you know, crush the market. Actually, Rach just said there seems to be talk that inheritance tax capital gains may be raised. Look, it may be, but I'm not sure he's going to do a massive amount now. The problem is we're still in the midst of COVID. So to do this, he may indicate that he's going to raise it. He may talk about it, and he may well raise it. You know, he may well say, but if anything, he might put it off till next year or not give the date. The reality of this budget is what they have to do is they give the budget, and then it gains royal assent, and effectively they're the things, effectively it sets out what the policies are for the next year. You know, so what we don't want to do is all of a sudden bring the stamp duty back and then stifle it with a heap of taxes, because I think that would be stupid. So I'm predicting that we're not going to see massive changes. I think we'll see some, but not stupidly. Not enough for it to scare the market, because that's not what they want right now. You know, that's just my take on it. So yeah, we'll see what happens, and we'll see our live. Or if you can't watch live, then stay around and watch it after. And I'll certainly be doing a highlights video and whatever else as well, and typing up all that. But yeah, have a fantastic week, and hopefully, if you're not one of the 2/3 that haven't had the vaccine, you can get your vaccine soon. But yeah, we'll catch you next week. See you guys. Bye.